Alright everyone, here we are with another video with Invest for Tomorrow. And to all the first time viewers and investors, welcome to the channel. And to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video and that you learned something new, and to stay tuned towards the end because I have a ticker symbol you won't want to miss that Cathie Wood and ARK Invest have been loading up on as it's been pulling back, and it's a SPAC merger that hasn't even happened yet. That's a very bold decision from ARK Invest in general and from Cathie Wood. So definitely you want to stay tuned on in for more information on it. We're going to go over the whole entire company, their website, what they go ahead and focus on, and how they have been reacting in the charts and how ARK Invest has loaded up. So stay tuned for all that information. So here we are with Sndl, Growers Inc. and Sundial has went ahead and had a run after a big pullback. So it hit a high here recently of 179. That was probably the biggest rejection that it's had since way back in February 24th. And this rejection is super important because that's where the bulls definitely need a breakthrough to reach newer highs and new resistance levels. But after this pullback, it hit a low down here of 139. So you want to keep that in mind as well. On the lower spectrum of things, if that gets broken through, you want to watch it carefully. So what's our support and resistance based off the chart today and this bullish run? So the 50-day moving average is 156. Super important to keep in mind. We're sitting at 158. So if we're above it, we're in bullish territory. If we're below it, we're in bearish territory. We want to watch this carefully. We want to pay close attention. But right now this is in tug of war zone. So you definitely want to keep in mind and watch this very carefully, as I just stated. Super important to understand. Now, I do want a lot of investors and viewers to be aware that when I talk about support levels, if they get broken through, that a stock can go lower. That gives you an insight on how bearish it could go, and you want to watch it carefully between that support and the next support. But usually when you're looking at a chart, there's two ways to look at it depending on what type of, stock trader you are. And I'm not here to give you guys financial advice or tell you guys how to buy, sell, or hold, but just to give you guys some insight on why supports and resistance are so important. So the support is important because when you know the support, you know how far down it's gone and how much further down it could possibly go, because if it got broken through, it's usually telling you that there's room for a stock to go a little bit lower, like we talked about in the previous support levels here when we were looking at the stocks. Sndl was probably sitting at 160 here, resistance 165, and then we also talked about look at it from between 160 and down here at 154. And at that point, we had the 50-day moving average probably sitting down here at 146, so you wanted to watch it carefully. And the closer it got lower, and if it broke through resistance, it could possibly pop up. So the point of the matter is, I want you guys to be aware of these points because that lets you know where there's an opportunity to buy more if you're in the long run. When you're actually going for a stock in the long run, your goal is not to just buy and catch the dip, because this is a lot of investors' mentality. And I know I'm going off track, but I want to talk to every single investor for a second. A lot of investors, their mentality is, I'm going to try to catch the dip. Oh, wow, it's going down. This might look like the dip. It hit below $1. I know this can run back up, for example, theoretically speaking. And instead of buying just 100 here and 100 at this dip, 100 at this dip, 100 here at this dip, 100 here at this dip, 100 more at this dip, 100 more at this dip, and I'm saying 100 more every single dip, they just put $1,000 at that dip and they just ride it up. And then every time it pulls back, they get a little bit worried, and that gives you the frustration of, oh my gosh, like I need to sell because I don't know if it's going to go right back down to this point and I'm going to lose all those unrealized gains. And that takes away the mentality of being long. It makes you start getting kind of caught into the emotional part of, I got in as low as possible, and then you don't buy anymore because you don't want to average up. And then you're also like, well, I want to try to maximize as much profits. I mean, this looks like the highest it's going to go. Oh my gosh, it pulled back down to 125. 25% is more than enough. You know what? I'm out. And then instead of riding the way up. So something I want to give you guys insight on is support levels let you know what to watch for, and if it stays below it, you want to be a little bit concerned and aware depending on what type of trader you are. But for the most part, if you're a long haul type of trader, support levels are your best friends, because you're looking for the next opportunity to buy at the best price. And that's the point of the matter there. Support levels are not there to scare you, and resistance levels are not there to scare you. They're there to help you. So it's all about what type of trader you are and what you're trying to look for. And then there's certain traders that actually wait for resistance levels to be broken through. And then if they get broken through and it shoots up, they ride that wave. And as soon as they see it pulling down, they create their own supports. And then they're like, okay, I'm out. And then they take that small jump of profit, jumping from, here to here. That 10-cent gain is all they needed. So it's all about what type of trader you are and what you're looking for. So I do want to tell you guys, the power is in the supports and the resistance. So back to all of this. So support is down here at 147. The 50-day moving average is 156. You want to watch how this does if it pulls back down below 156, between 156 and 147. But the most important thing right now for this momentum to continue is for the bulls to break through resistance, and that's 160. And then their next resistance level is up here at 167. But before getting there, 160 needs to be broken through, turn into a support so that the bulls can reach newer highs and new resistance levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Stay tuned till the end, because we do have a ticker symbol you won't want to miss, and you definitely want to have it on your watch list. Welcome back, everyone, to another video here with Invest for Tomorrow. And to all the first-time viewers and investors, welcome to the channel. And to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watched this video, that you found it helpful and informative, and that you learned something new. So here we are with the website to one of the companies that ARK Invest has been buying as the dip of the correction had recently started. All the way to this point, they've been loading up. We're going to look at their position, how much it's grown. I caught it on the first date that they started buying, and as it continued to go lower, they just kept on adding more. And as it's starting to kind of recover and rebalance itself, they just keep on adding more. And you know how ARK Invest believes in 3D printing. This is a 3D printing company that's going to go through a SPAC merger. So this is the website, Mark Forged. I definitely recommend you check it out to learn more about the company. But let's look at how ARK Invest has reacted. And we've been talking about this one since I started to see strength. So we went ahead and talked about this one over the weekend. And I stated over at the Patreon that A1, this is a SPAC merger that has been pulling down due to the market conditions in the last month, but picked up steam recently. The merger has not been finalized, and it should switch from A1 to MKFG sometime close to the beginning of the summer once the merger is finalized. So it's still in the process. It's not even guaranteed. But now, one of the things that this is very interesting about is ARK Invest has been loading up on this one while it has been falling within the last month. They have went from holding around 300,000 to 1.5 million shares in just a month. That's a bold approach, getting into this one early because the merger has not been finalized. While sitting at $12, it's looking interesting. The closer to 10, the more interesting it gets. I will post a link down below for you guys to see the company and so forth. And I even saw an article. But if you guys want to know live updates and weekly updates on when I'm looking at different ticker symbols, you can join over at the Patreon. You'll gain access to all the ones I've talked about previously and the ones I'm going to talk about in the near future as the weeks go by. So we've been talking about this one and watching this one, and I definitely talked about how, on the RSI it's pulling upwards, the MACD, there's almost a cross here, crossing section that it can continue to pull up possibly, and there's some recovery, but we wanted to watch it to see if there was a pullback since the whole market was pulling back, on Monday, slight recovery. Then yesterday it looked a little bit red, and today it got green. So we'll see how things play out the rest of this week. But, at $12, this is looking like a bold decision from ARK Invest to be buying on the way down and on the way up. Okay, very, very interesting. So let's go ahead and see here their chart, and then we're going to look at how ARK Invest has added up. I basically stated it there, but I want you guys to see it in their ETFs and their PDFs that I have. So here we have it, seeing it going downwards. So the first time that they registered a purchase was back on the 24th, okay? So on the 24th of February, that's where this was running up, okay? And then it started to pull down since the 25th, and it hit a bottom here of 10.30, ran back up to 13.70 and some change, pulled back down, and it's sitting at 12.38. So let's look at how ARK Invest has reacted since. So when I did that post on Patreon, they had 1.5 million. Let's see if they've actually gone up a little bit, and that's going to tell you how bold they are about this, because even when it's pulling back, if they're buying more, that's pretty big. So here's on the 24th, and you can see A1 right here, 208,917 shares. That was on the 24th of February in RQ. So let's go ahead and pull up the 16th, which was yesterday, right, of March, RQ, and we're going to look for A1. So A1's right here, and they have 1.6 million. 1,600,174 shares. They're being bold. When I posted it on Patreon, they had 1.5, and that was over the weekend. So A1 is definitely going to be maybe number 2 NNDM. That's the way I'm seeing it. That's how bold they're being about it. And I feel like they don't want to miss out on this, because they probably feel like they've missed out like on other ones that have grown tremendously, that are like DD. When it comes to the 3D printing space, like this one right here, I think it is, yeah, 3D systems. You know, this one ran up all the way up to a peak here of $50 and some change from the lows down here of $11, and it pulled back, and I haven't really seen them do much about this, but I feel like they're not worried about this one. They're like, you know what, that one already grew. I want to catch the ones that are down here with the potential to go up here and stay up there, right? That's really what they're looking for. So A1 is definitely looking like an opportunity, and this is definitely one you want to keep on your watch list and do more due diligence on. So definitely go to their website to see more about them. But man, 3D printing is looking like the future for real. If we haven't accepted it yet, you know, those are some of the plays that are going to be growth sectors in the future, and they're going to change the way things are done, you know, systematically like we know it. I mean, it's just incredible what a 3D printer can create while no one's around. It can just do it. So it's going to make things of manufacturing and everything a lot more, I guess, smoother, hopefully, without any supervision, and it's just going to allow things to be produced. And then this has a little bit of a tie-up with raw materials needed to print. So it's just wild how raw materials and 3D printing is going to be innovative in changing the game to everything that we know. And that's part of the market. I mean, the market is always ever changing. There's always new innovation. And while you don't want to accept certain things, it's probably the time to accept it, especially when you see institutional investors being bold. I definitely look into other institutional investors if they're buying into this one before the merger. That would be interesting as well. But I believe that, you know, for, you know, the track record of NNDM in ARK Invest portfolio and growing through all these offerings in the pullback and running back up, and how bold Kathy Wood is on 3D printing, and she's going into this one before the merger, I mean, that says a lot. I look forward to seeing your guys' thoughts down below and how you feel about this one, but definitely one to add to your watch list. As always, guys, thank you guys so much for watching, and let's make some money.